So will Plug Power survive in 2024? We've seen its stock go from the 70s in 2001 all the way down to sub $5 currently. Now back in November, in their 10Q filing, they said they had a going concern regarding whether they could survive or not. And so as a result, the stock continued to decline from those levels. However, if price finds itself in a monthly buy level at $3.50, however, the issue is, if you look at things on a daily chart, you can see that the sellers are still in control. You can see the buyers attempted to push price higher, but when you get closes below the uptrend line, well then, sellers remain in control. Buyers attempted again to push price higher, only to see sellers push price back down. And then price pushed up again as the buyers tried a third time, only to be met with sellers. Now each time price penetrates the zone and gets deeper and deeper, it opens the door for price to break the zone and close below and move lower. Now, before we look at the analysis on the weekly chart that I want to revisit, let's look at this article. So Plug Power is trying to become an end-to-end hydrogen solutions company that offers everything from hydrogen production to storage to hydrogen fuel cells. Currently, the company's main product is a fuel cell used in forklifts and other material handling equipment that is used in high-volume warehouses and distribution centers. It counts well-known companies such as Amazon, Walmart, and Home Depot among its clients. The problem with its business model is that the Plug Power sells the hydrogen fuel to its customers to run these fuel cell powered forklifts at huge losses. Now, Plug Power's current business model is not sustainable, which is why the company began looking to build out its own green hydrogen production facilities. The goal is that by producing its own green hydrogen, the company would be able to sell hydrogen fuel to its customers profitably instead of selling the fuel at a loss. The problem the company has run into is the cost to build hydrogen production plants is quite high, and new projects often come with delays. Meanwhile, Plug Power is slowing down its investment in facilities in New York and Texas until it can find better financing options. Now, Plug Power has previously set out ambitious plans of generating $20 billion in revenue with 35% gross margins in 2030. However, management has lost a lot of credibility, with investors given the continued push out of its hydrogen plants coming online and the issuance of a going concern warning. Now, Plug Power remains a very risky stock to own at this point. The company has yet to prove it can generate positive gross margins, let alone profits or cash flow. At the same time, it has plans to further dilute investors and add to its debt load. This is a stock best left to watching from the sidelines, and I tend to agree. However, let's zoom up to the weekly chart. I love trend lines. Trend lines make price action a lot simpler because it removes the noise. And so here's what one can be looking at. Now, as you can see, if you really connect the highs, you can see price breached. Let's put this in a different color. You can see price breached the downtrend line. You can see also we have positive divergence as well. So price is definitely at a bottom. The momentum to the downside has slowed. However, one should not go long. And if you got a long-term horizon, you don't worry about a couple of dollars that you missed. But look for price to take out $6. which would be a gap fill, which would be where the 200-day moving average is at as well. Thanks for watching. Subscribe, please like the video.